Hello and welcome to NDTV Profit. You're watching the Mutual Fund Show. Aditya Birla Sun Life AMC is coming out with a conglomerate fund. Now, I haven't read too much about it because I would want to approach this with the curiosity of what all of you might have. That why is it that a conglomerate fund could do well? Is there a network effect in place? Would it be that the size will give some of these conglomerates the heft to actually expand or grow faster than what some of the other companies might? I think that's the key question that I have for Harish Krishnan. He'll be joining us in moments from now. He'll be co-CIO and head of equity at Aditya Birla Sun Life AMC. But it's an interesting option that they are coming out with. Also, we'll have on the show Saloni Sanghvi. She's been on the show a number of times, founder of My Wealth Guide. It'll be interesting to understand from her if she believes that there are some things like this that could help. Actually, I'm told Saloni is here with us, so maybe I can start off the show with Saloni if she's there. Okay, Saloni, you're here. Good seeing you, Saloni. Been a while. Thanks so much for joining in. Hope all is well.
Thank you so much for having me on the show, Neeraj. It's great to be back.
Great. So, Saloni, before we talk about other things, I want to start off with this topic because of which we are getting Harish also on the show. They're coming out with something called as a conglomerate fund. Now, NFOs generally are not preferred by advisors. I'm presuming that would be the same this time. You might want to wait and see the proof of the pudding, etc. And I'll come to that argument too. But what could the logic be behind a conglomerate fund? If you were to think about whether a conglomerate fund can have advantages, how do you think about it?
So, Neeraj, interestingly, there are two NFOs in this space right now. There's a passive fund by Tata, which is the BSE Select Business Group Fund, and the active fund by Aditya Birla. I feel the management of a company plays a pivotal role in determining its success, particularly for smaller or younger companies. One of the key advantages for companies, which is part of a conglomerate, is the brand reputation, the scale, and the financial strength. They can raise capital at lower rates. They can invest in a lot of emerging or sunrise sectors. In fact, to put things in perspective, top 10 conglomerates in India account for 33% of the total market cap. So we have large conglomerates which account for a large part of India's market cap across 41 sectors. You'll often hear people who will be like, oh, I invested in this company because it's an Ambani company or a Tata company or, various other business groups like that. Now, as you correctly said, typically I don't favor investing in NFOs because they lack a track record, and often there are already existing opportunities in the same space. But I think in this case, this is a very different and interesting investment approach. It's not something that's already there. We don't have funds doing something like this already. And, if you kind of look at between the currently active and passive approach, I definitely prefer the passive approach in this case, the active approach in this case. The passive approach invests mostly in large cap companies, whereas the active fund, which is the Aditya Birla fund, has a higher tilt towards the mid and small cap companies. While mid and small are more volatile, and they don't have the same level of corporate governance as larger companies, those which are under the umbrella of large business groups actually have a higher probability of success. So I think this is actually a very interesting space and opportunity that is there.
Saloni, it's a rarity. I haven't seen you talk about an NFO. Not that you are against them completely, but you just want to see the track record. But here you're making an exception. So do you believe that things like, for lack of a better word, a network effect or the management competence, and larger the management, the more economies of scale, etc., might be at play, intergroup benefits might be at play? Would all of that come into play, and therefore would an active fund like this, we don't know what they will do, but an active fund like this be able to choose the best performing companies within a particular group and within multiple groups, and therefore create a portfolio which could be dramatic? What stops let's say a flexi cap fund from doing the same?
I think one thing that is definitely there, the advantages that you mentioned are definitely available. Secondly, for me, what is a concern in a lot of mid or small cap companies is the level of governance. That is something which is very important in companies which are part of a conglomerate, because obviously the larger companies follow a certain level and then that flows to all the companies within the conglomerate. So I think that is a huge advantage when you're evaluating small and mid-cap companies, and automatically which belong to a certain business group, there is a higher degree of comfort for that. So I think this is something that definitely, would benefit from that. In terms of other funds, I think when we look at other funds, because they have a different universe and the focus is a little different, I think, they don't actively invest in this particular segment. They may be investing in companies which belong to certain business groups, but not specifically that. So I think within the small and mid-cap allocation, this could be an interesting fund to have.
Got it. Saloni, would this be a part of a satellite portfolio, even if you're going for it or if somebody is going for it, or is it a part of a core portfolio?
I would definitely recommend looking at this as part of the satellite portfolio because again, in the small and mid cap space, you do have a lot of options. If you remove the top 250 companies, everything else essentially is in the small cap universe. This universe is obviously a little more restricted. So I would say that this would be part of the satellite portfolio.
Okay, a part of the satellite portfolio. If we can get in Harish Krishnan at some point of time on the show, I believe there's a technical issue there. We'll try and get his views as well. But and that will help you understand from the fund manager's perspective what is his theory. But Saloni here believes that it's an NFO that she might make an exception to as well, because usually she doesn't recommend NFOs, and it's a part of a satellite portfolio for Saloni. Okay, Saloni, just wondering, yesterday, day before, we've had CEOs and CIOs to whom are asking that if indeed you're making a portfolio afresh for 2025, what would an ideal portfolio mix be? Can I ask you to just, at the top of the bat, assuming that you didn't have any investments thus far into markets or mutual funds, and you have to create a fresh SIP portfolio, Saloni, starting now, starting investing in January, what would your own personal portfolio be like? What kind of funds? What's the segregation between large, mid, small, debt, multi-asset, commodity funds, ETFs, etc.? How do you segregate it broadly?
So I think whether you're starting the portfolio fresh or you have an existing portfolio, I think the same principles kind of apply to both, which is investing based on your asset allocation, and how much risk you're comfortable taking. So I think that principle applies whether it's a new portfolio, existing portfolio, whether you're doing SIP investments or lump sum investments. I think again, depending on what is the time to goals, if you were to ask me my personal portfolio, again, I am investing for a very longer horizon. So it may not be applicable to most people, but given that my horizon is at least 10 to 15 years, and I have a more aggressive risk profile. So my portfolio, in terms of investment is around 50% in large cap companies, around 25 in mid cap and 25 in small cap. I don't have international funds because it is a little difficult to invest, because RBI does not allow any incremental investments. And I think that these three segments are more than enough for most people because there are a lot of options within these segments as well to kind of look at different funds within the segment. So this is essentially what I'm looking at. But again, say, for example, if someone had to start a portfolio fresh, I would again highly recommend looking at how comfortable you are with what level of risk, whether you're more conservative or you're more aggressive, and how much time you have. So, say, for example, if you have less than 5 years, then you would only look at flexi cap, large cap, or index funds, regardless of your risk profile. But if you have, say maybe 5 to 7 years, you can look at adding a mid-cap fund if you're more aggressive. And if you have more than 7 years, you can look at adding small-cap funds as well to your allocation.
Noted. Okay. Well, that's a good mix. Harish Krishnan, co-CIO and head equity at Aditya Birla Sun Life AMC, also finally is with us. Harish, good having you. Before we come to the NFO that you're launching, it's an interesting one. We have an advisor here, Saloni, who usually doesn't recommend NFOs, but is willing to make an exception because of the kind of or the nature of the fund is. So we'll talk about that. But I was asking her that if she were to start off a portfolio construct afresh currently for 2025, what would her own portfolio construct look like between large, mid, small, multi-asset, hybrid, commodity, what have you? Can I ask the same question to you very quickly, Harish? If you were to create a portfolio right now, what would your portfolio have?
Sure. Good afternoon, Neeraj. So our portfolio would also mirror some of the choices that Saloni mentioned, which is to have a greater focus on large and flexi at this point of time, which is where we see a greater risk reward opportunity from a perspective. Um, Unless somebody is very aggressive and has got a real long-term horizon, one should dial down the overall risk profile from that perspective. So the way in which we kind of contextualize this response is that if you as an investor were very comfortable with small cap in 2023 and 2024, we think that it makes sense to at least come down a notch and move into mid caps. If you were primarily focused in mid caps, then to go down a notch and move into large and mid caps as a category. So move down one notch in terms of risk profile rather than be completely absent into equities. Asset allocation plays a pivotal role, especially in markets where there aren't too many seemingly cheap pockets where one can invest in, and therefore one needs to have a more balanced approach to investing. I would also add a reasonable amount of international exposure wherever it is possible, maybe through gift city route, etc. That could be another option for diversification. So yeah, broadly a diversified basket with the fulcrum of the investments in large and flexi cap as a primary, vehicles of wealth creation.
Okay. Now, Harish, where would a fund like a conglomerate fund feature in? Because it's a very interesting offering. And also tell us a bit about this fund that you're launching.
Sure. So see, let's go to business 101, right? How do businesses succeed? You need to have broadly three things. You need to have access to capital, you need to have access to talent, and you need to have access to customers. If you have these three buckets, you have a reasonable chance of success. Now, what we've seen is that there are certain business houses which are part of conglomerates, wherein these three are actually in abundance of. So if you look at some of our larger conglomerates, many of them actually have got rating profiles which are even better than the sovereign rating profile. So access to capital, especially low cost capital, is actually quite good when it comes to conglomerates. And this is seen, even from the bond market perspective, wherein lending to conglomerates, businesses which are part of a larger conglomerate, typically attracts a lower cost of capital. In terms of access to talent, again, these conglomerates actually get access to some serious large talent pools. But more importantly, in Indian context, these conglomerates have pretty much been part of Indian lifestyle for the last 50, 70, 100 years. And therefore, conglomerates have got access to customer bases, which means that a new venture or a new product can be very easily cross-sold into these customer cohorts that they, in which case, naturally enjoy with. So therefore, I would think that, conglomerates are a vehicle wherein the odds of success are quite high. Now, why conglomerates at this point of time is, I think, far more important than, because we are talking about household names here. These are not groups that, are undiscovered or people are not aware of. I think at this point of time, we see three confluences that are happening, which makes us positive on conglomerates as a theme. First is that we are going through an initial surge of private capex. Private capex, if I were to think about how it has panned out over the course of the last 25 years, in the first decade, it went from about 25,000 crores to as high as about 6 lakh crores. We saw almost a 20-30x jump in private capex, right? Then from 2010 to 2019, we saw private capex meander at that 6 lakh crores. There wasn't any growth capex that came through. And then post COVID, we've seen that 6 lakh crores going to 10 lakh crores. So that seems to be the broad journey, a very accelerated kind of a curve in the first decade, meandering in the second decade, and now a gentle kind of a takeoff that we are starting to emerge to see through in the last 2, 3 years. Now, the reason why conglomerates are attractive is that out of this 10 lakh crores, these conglomerates, which we have identified as 35 business groups in India, account for about 50% of the capex. So that really is the first key reason for us to get excited, because capex that people do today is the source of future cash flow and profits 3, 4, 5 years down the line. And these are the conglomerates that are actually investing significant portions of their profit pools into capex of tomorrow. So that is point number one. The second reason why we are excited about conglomerates is that in many conglomerates we see the next generation or a change agent coming in into fore. What we've seen is that management teams and promoter teams in their 40s are possibly where vibrancy is at their peak. They have the energy and drive to reimagine their business houses in a new construct, and they've got reasonable experience to understand the business cycles of their respective businesses. What we are seeing today is that in many business houses, the next generation stepping up, and therefore we are seeing a reimagination of these business conglomerates where they have dominant cash flows of legacy profit pools. It could be in mining, it could be in utilities, it could be in cement, etc., into trying to redeploy these cash flows from these sectors into sectors of tomorrow. Which brings me to the third point. We often hear about the fact that make in India has to happen. Needs to be a reimagination of manufacturing, renaissance in India, etc. These are the groups that are actually investing in the hydrogen ecosystem, in the solar value chain, in the semiconductor value chain, into space and technology. So now these are some very big, gutsy, bold bets that these entrepreneurs and conglomerate chieftains are currently pursuing, which makes us exciting. So I think it's a confluence of these three things: the fact that there is some very big capex that is happening, the fact that new generation is coming on board in many of these groups, and the fact that they are reimagining and repurposing the cash flows of yesterday into the sunrise sectors of tomorrow. And that is where we think that there is a value re-rating opportunity that can come through over the course of the next 3, 5 years, and which is why we think the conglomerate fund makes a lot of sense.
We have a minute left. Saloni, can I just ask you to chime in before we wrap up the show? You've heard the fund manager's view as well. You mentioned it's a part of the satellite portfolio. Is this something that you would give time? Saloni, we have about 45 seconds. So is this a fund that you would give time, or would it be something that you would buy for a short-term perspective?
I think this is something definitely that we would give time to, something that you'd like to hold for a longer period of time. It's not something I would look at for a shorter period, at least not less than 5 years for sure.
Okay. Well, on that perspective, Saloni, Harish, thank you both of you for joining in today and giving us your thoughts, and also explaining how you would construct your portfolio, aside of course, talking about the conglomerate fund from the house of Aditya Birla Sun Life Mutual Fund. So thank you so much, both of you, for joining in.
Thank you so much.
And viewers, that's all at the time that we have on this leg of the Mutual Fund Show. Stay tuned to NDTV Profit.